All right, welcome back, everyone. My name's Carlos, and we also have Dave here with Robinhood Stock Market Watchlist here on Facebook. Today is Sunday 21st on April 2024. This is our live stock market meeting that we do every week, and the reason for our stock market meeting is really to as a community to kind of come together and to talk a lot about stocks, the economy, but most importantly, what's going to happen before it happens. And usually we always like to focus a week out, but sometimes we can always focus a couple weeks or months or a year out, as things can be very predictable at times. You know, the more that we learn more how things work. And so we always like to go over, economic reports, but sometimes, it's good to kind of talk about certain things that we don't always talk about. And today I wanted to kind of go over some basically, when are the best times to trade? And ultimately, as we've mentioned before in the past, the first hour and the last hour have always been the most volatile times. And so if you see on my screen, and I have these images also posted in our learning stocks chat room for your convenience. That way you can grab them from there. But this little image says basically when is the best time to trade. It's basically the first hour and the last hour for looking at it on the Eastern time zone. But the morning is always the one with the highest volatility, because the market opens up and people are trying to buy and sell, and so there's a lot of activity going on. And then you have a midday activity, which usually has to do with either economic reports or federal speakers, or it could be the president, the White House, and so on. There's another image here that's really, really important that kind of has a breakdown of the entire day. And so
I'll take care of that.
Okay,
brother.
yeah, we're gonna have to
I got you.
mute your mics now. I definitely believe in free speech, and if anybody has any questions, feel free to unmute your mic. And if you want to, if you have a question or a comment, or want to add something to this, feel free to do that. But if there's a lot of background noise, yeah, we'll definitely have to put you on mute there. So again, the first hour is very filled with a lot of volatility, and so we call these the bell traders. Take advantage of the quick movements in the first 30 minutes of the day, but typically it's the first hour of the day. And once we reach the first hour of the day, usually a stock price has reached where its intended price for the day, and then it usually will be kind of arranged throughout the rest of the day.
Working on it.
Yeah. Okay. No worries.
Go ahead, brother.
So, but then we may have a breakout sometime after the first hour. It could be maybe the second hour, third hour. And this is usually, it says the breakout traders watch for the momentum, the breakouts in the first few hours of the trading day. So, but then all of a sudden you'll see these news alerts that come out, and then you'll see this breakout, whether the stock goes up or it goes down. But typically these are because of the economic reports that may result after the first hour. And these news alerts start popping up, and there's a lot of people that are relying on that. But there's this saying where you buy on rumors, sell on news. And so the idea is to kind of know what's going to happen before it happens, and know and to basically kind of be ready for the news. And so not to wait for the news and then to react after that. So then all of a sudden we'll learn that we can see what economic reports that are going to be released before they're released, and that way we have a better idea of what's going to happen before it happens. And that's kind of the thing that we're always looking into, and to determine also if things are going to be going up or down. And so then we have range traders that there's no more news. People are just kind of trading in within that area. Very predictable. A lot of things just go up and then down, but in very small amounts. So people may trade off of that. And then you have the closing bell, and that could be the last hour or it could be the last couple hours. Just depends on what's happening with the closing time. And typically we'll have the White House that'll come out live, and they'll talk about things, and they could say something that investors don't want to hear, or maybe it's something that they do want to hear. So that's why it's really important that we are aware of what's scheduled to happen. And so and again, this is really, really important stuff. And if you're new to this, you definitely download this in our group. I posted this in our learning stocks room in the chat room. Or I can also post it in our featured and announcement area of our group if you'd like. But to get to our economic reports, we always like to use the investing.com website, or you can also use the application. Now, once we're on the economic calendar area, it's important that we filter out everything by clicking on clear all. There's only two areas that we want to see, and that's putting a check mark under the United States, and then under importance, we want to put a check mark under the 3 stars, because we're telling the system that we want to see everything that'll have the biggest impact on the United States stock market. And we want to pull up for this week, that way we're aware of what's going to happen before it happens. And it looks like we got a pretty decent schedule for this week. Now, Monday there isn't anything scheduled, because usually Monday is a day where it kind of absorbs news from the weekend. But typically we'll see reports scheduled for Tuesday, Wednesday, and Thursday, but very rare do we see something scheduled for Monday or a Friday. But we do see something for this Friday, April 26th. But starting with Tuesday, April 23rd, we have 3 economic reports. Now, when we're looking at these reports, it's important that we're able to determine whether these are going to be released before or after the stock market opens. That way we're prepared for the volatility, and for what kind of volatility is something that we have to determine. And so let me put a couple more people on mute here really quick. That way we can eliminate some background noise. So the first economic reports are the S&P Global United States Manufacturing PMI report. And then the other one is the Global Services PMI report. And both of these are for the month of April. Now, the more rare these are, the more volatile it's going to provide the stock market. Meaning, or if it's a weekly report, it's going to provide a mild amount of volatility. If it's a monthly report, it's going to provide a very strong amount of volatility. But if it's a quarterly or a yearly report, it's going to provide a very massive amount of volatility. So these 3 are all monthly reports, so that will provide a very good amount of volatility for Tuesday morning. Now, these are going to be released 15 minutes after the stock market opens, and then the third one is 30 minutes after the stock market opens. So it's just going to add more fuel to the fire, just making it more volatile. But how we can determine what kind of volatility? Will it provide bearish volatility or bullish volatility? And how we can do that is comparing the forecast, which is the prediction, versus the previous report from the previous month. And so the previous report was 51.9, so the forecast is supposed to be greater than the previous at 52.0. Same thing with the second report, where the previous one was at 51.7. This one is at 52.0. So this is telling us to be prepared for bullish characteristics with these economic reports. And then we have the new home sales report for another, it could be another record-breaking number of 668,000 brand new homes sold for the month of March. And where the previous report was 662,000. Now, I remember when these were right around 400,000. That seemed to be kind of the normal. But as we're approaching a very interesting time with our economy. Used home sales have greatly declined, while new home sales have keep increasing because maybe it costs less. And if you're going to spend a lot of money on a house, you might as well buy a brand new one for probably less than a used one. And so it just seems to make more sense going that way. But most of the economic growth comes from the existing home sales, because that report is in the millions, not the hundred thousands. And so that can make a big difference, but it's still very an interesting thing to see. But out of these three economic reports, all three are providing bullish results. And so be prepared for Tuesday morning to be bullish. Just in case if Monday is bullish or bearish, we need to be prepared for what we know is going to happen. And so Wednesday, April 24th, we have two economic reports. One is the durable goods order for the month over month for the month of March. And this report is scheduled to be released 1 hour before the stock market opens. While the crude oil inventory levels, which is a weekly report, is going to provide a mild amount of volatility, is going to be released 1 hour after the stock market opens. And so, but the durable goods order month over month for March is forecast to be released at 2.5%, where the previous report was 1.3%. So it is definitely greater than the previous. Now, the only way that this could provide an opposite effect is, like for example, we have good news could be bad news, is if they're going that mode of where we need these numbers to be lower in order for us to try to lower our inflation levels, so that way we can start decreasing interest rates. But as we've talked about in our previous meetings, that lowering our interest rates may actually do more harm than good. And so if we do lower interest rates, that could cause more buyers to buy more things and to create a possible shortage. And if we have a shortage in certain things, that could create an inflation. So it could really defeat its purpose, and that's why I don't think we're going to see any interest rate easing this year. It's actually something that would need to be done during a recession, which is something that we'll talk more about here in just a little bit. But going with Wednesday, April 24th, this durable goods orders definitely looks bullish. Now, the crude oil inventory levels is forecast to be at 1.7 million barrels, where the previous report was last week was 2.735 million barrels. So this report, the number needs to be down. So the lower the report, it's actually bullish. Just like the unemployment report or the initial jobless claims. Those two are the only reports that if the numbers are lower, it's bullish, versus everything else needs to be higher for it to be bullish. So this is lower than the previous report, which also tells us be prepared for a bullish results for Wednesday morning. So we have 2 days of just pure this is going to be a bullish day without any mixed results, where we could see both bullish and bearish. But so far so good. They're going into Thursday, April 25th. We have two economic reports, and the GDP is a major one. This is the biggest one for this week, you guys. April 25th, Thursday, GDP, a quarterly report, which again only happens once every 3 months. So the news is going to be really focused on this one, and this is going to be released 1 hour before the stock market opens. Same thing with the unemployment report, but all eyes are going to be focused on this quarterly report, because it kind of tells us kind of where we're at with our economy. That way the government can focus on the interest rate easing. And at the 2.5%, that could be more towards their goal of where they're trying to be. And I can't remember exactly where it is, but I think it's just right there, 2.3, 2.5. And so, but even though this number is lower than the previous, this would typically be bearish, but I believe this may provide bad news is good news. And so but to be determined. We'll have to see as we watch, certain activity, before close on Thursday. So we'll really need to, or on Wednesday.
I love you.
So Friday we have two core PCE price.
This weekend. I'm sorry.
No, I don't care.
I care.
I don't.
Okay, guys, sorry about that. So Friday core PCE price index, we have two. We have the month and a year over year, and so we have the both of them, which are scheduled to be released 1 hour before the stock market opens. And the first one, which is 2.6, is the forecast where the previous report was 2.8. And where the other one is both the 0.3% and the previous is 0.3%. So, but this is kind of showing us, be prepared for bearish characteristics. But this could, but it's also a Friday, and as you've noticed, Fridays have been very sensitive for investors and traders going into the weekend of with what I call uncertainty, because we have 2 days of anything can happen, in the Middle East or here, or that could provide some kind of volatility with the market that's unknown. It's always kind of a surprise. Dave, do you have any thoughts on this week's economic reports?
Yeah, absolutely. As you guys know, I give out the economic reports in bite size. We do the YouTube shorts. So if you want to have access of that, we throw them all up on the Facebook for Robinhood Stock Market Watchlist. So that way you guys can grab it there. If you want it any quicker, it would be on my YouTube. So check out David Worrell on YouTube. You'll see I got the same picture on there. Now, Carlos brought up all the main points that are going on here. Okay, guys, we have PMI on Tuesday. That's going to be very important. That is something that call him Papa Powell or Fed Powell. He takes a look at those numbers, as well as the durable goods and the GDP and the PCE. But the GDP is it's very, very big, guys. The GDP is humongous. It's the biggest piece of data, the gross domestic product data that Papa Powell will take a look at, and he will determine whether those numbers are equivalent enough to actually start to cut those interest rates. Now, as of right now, if you look at the Fed tool, you'll see that we aren't even looking at interest rate cuts for most likely not even until September. And if you look at my screen here, I also just brought up the current inflation rate, and it's at 3.5% right now, which is 0.1% higher than last year's inflation rate. So the fact that the inflation rate is so sticky right now, guys, this data is a huge correlation to what we have going on right now. So we need to be really, really attentive to what these numbers come out. If they keep coming out as hot as they did last month and last couple of weeks, we can really expect that those Fed rate cuts are almost non-existent. I think at this point now, the way the market is pricing things in, it's non-existent. So I would be really, really careful with that. But yeah, we will have all that bite-size data for you in all the chat rooms, in all the Robinhood Stock Market chat rooms. We'll post it on the pinned featured section, as well as I will post it as a post for you guys as well. So yeah, that's pretty much all I got on that, Carlos.
That's good.
Yeah, it's guys, put these on your calendars. Just understand a lot of these happen usually around 8:30 market time, and that will give you kind of the direction the market's going to head that day. And with this big of a pullback, I think that forecast, if we do get that forecast, that even if it's the same forecast, but if it's even better forecast, it's showing that we are slowing, we are getting a lower gross domestic product rate coming out quarter over quarter, I think that's going to show a huge move market, and this, instead of being a bear market or a recession that everybody's fearing it. Now, I don't want to get anybody's hopes up because we are not seeing new lower highs. We're seeing higher volume to the sell right now. So there is no hope for us right now, except for that the GDP data forecast is showing a little better than previous. So that attentive and assertive. And of course, Carlos, before you go into the most intense. So that's totally up to you. I'm not sure if you're going to be going right into the anticipated earnings or not, or if you give me the floor for go over the S&P 500.
I want to go over where we're at with our economy, but also the stock market and the cryptocurrency. Really quick, if you guys want to tap back onto my screen really quick, it's always good to kind of have a little refresher of where we're at, kind of like a map. Where are we? When you're traveling somewhere and you're like, okay, you're looking, where are you, and that way kind of where you need to go to get to your destination. And so it's always good to kind of know where we're at with our economic and stock market cycle, but also where we're at with our cryptocurrency cycle. Now, as last week with cryptocurrency, we just went through the Bitcoin halving. And so and this is, the cryptocurrency has a 4-year cycle, and that's what's nice about a cycle, is that it resets itself. It allows it to be more and more predictable the more you're familiar with it. And so the image I have here is our 4-year cryptocurrency cycle, and so it just reset. So with the Bitcoin halving event, and so this is from 4 years from here to here. We're right in the middle of the year, so each line that we see here represents another year. So this section here represents the rest of 2024. Is just going to continue to rise, where we could see Bitcoin at $100,000. And so, but it will continue to rise beyond any of its previous highs, and going into next year, which is going to continue the bull market for cryptocurrency. Pretty much every single cryptocurrency we're going to see some new highs. No matter which one it is, but I always recommend at least the top 20 highest market capital stocks. But when we see some pretty interesting catalysts next year in 2025, we could also see some other brand new cryptocurrency. But like I said, just focus on the top 20 and to really sell right before 2025, because 2026 is the bear market for cryptocurrency, and the best time to buy in and to wait for basically the first quarter of 2027 is going to be the next bottom. And so where cryptocurrency could be exceed over 200,000, my prediction is we'll see Bitcoin reach right around $240,000 at the top before it plunges back down to probably right around $100,000 is going to be the bottom. And so, but it's important to know 2027 early that year is the time to buy back in, and then and just to keep holding until 2028 when the cycle resets itself, and then it'll continue this look. And so again, I recommend that you download this from our learning chat room for your reference. That way you can always look at it. That way you are aware of where we're at there, as well as the stock market and economic cycle. So this is very, very important. So the blue line, which is our economy, the red line, which is our stock market. And I have kind of a little yellow X here, kind of letting you know kind of where we're at here. And these green boxes lets us know what we need to be focusing on. These ones are basically going to be, these stocks are going to be pretty much at their lowest point at this time. And we want to sell the stocks that were purchased on the opposite end. So like, for example, the market bottom, when we had COVID, for example, a lot of these technology stocks, finance stocks were at their bottom. And so we buy low at those points, and then as the stock market reached the top, that's when we'd want to sell those financial stocks like Bank of America, Wells Fargo, Chase, and so on. Technology like Tesla, Apple, Amazon, AMD, Nvidia, and so on. And now, well, actually, several months ago, when we were talking about this, we're talking about where we had reached the market top, or even before that, how we want to focus on the basic materials, energy stocks, and staples, where energy stocks, which would be like BP, ExxonMobil, basic materials, for building materials would be like Home Depot, Lowe's, staples, which is more like your general, consumer retail items, stores like Walmart and Target and so on. And so again, these are stocks that were low, very, very low several months ago, and now they're all up, 20% for the year. And so, but it's interesting that when you know where we're at, all of a sudden we start getting this interesting news, like the issues going on in the Middle East, or what's going on with Iran and Israel. Whether it's coincidence or manipulation, it always seems to happen at the exact time that will help pour more fuel on the fire, meaning making the situation more intense, and particularly for our in our favor. And so when we look at a lot of energy stocks, like I said, they are up a lot, and where technology stocks are down a lot. And so if we're right here within our stock market and economic cycle, that means that the stock market, which is coming down, and as we are approaching the full recovery of our economy. Now, even though as we're approaching our full recovery of our economy, that means that the early recession is right around the corner. So something is going to happen. It could be, a financial collapse, or maybe the war does break out, or whatever. It's going to be something. We are headed for a bear market. And we can see this coming as we're approaching the election, because the election always provides uncertainty, because we don't know who is going to be elected, because every candidate will specialize in something different. We'll want to invest in something completely different based on who is going to win. And so, but when we do have someone that's been chosen, then we know what to do after that. And that provides uncertainty. So I believe that our market's going to continue to go down as things get more uncertain. But again, just know that an early recession is right around the corner. Once the full economy has reached its peak, you'll notice that the stock market, it will continue to plunge, except for, like I said, the energy and basic materials and staple stocks will hold pretty strong. Same thing with precious metals. We don't really have these here, but things like gold have also done more than 25% recently. So, but again, it's just really important to know kind of where we're at right here. Dave, if you want to kind of let us know where we're at with the S&P, if you guys want to tap back into his screen, let's see where we're at.
Yeah, sure, guys. I got the big head here. You go ahead and click on my face so you can see my screen here, guys. So one thing I always like to do, usually before we start diving into the most anticipated earnings that are going to be coming up real soon here, is just to get an overall general idea of the stage analysis, okay? And I've been studying Stan Weinstein's stage analysis, and according to his stage analysis, if we look at it on the weekly, we're still above a 30-day moving average. So we still have some room here to kind of pull back and make sure that we stay above a 30-day moving average. But one thing I like to do always is zoom in on this daily. Now, I always use this 21-day moving average, and if you guys were here last week, I talked about this moving average. we talked about how we're breaking this moving average, this 21-day moving average. And not only are we breaking this 21-day moving average that we used this whole time on this bull run. If you guys look all the way from last October's lows, we used this 21-day moving average to show the strength in this market. As long as we stayed, I've kept saying, as long as we stay above a 21-day moving average, then we are looking bullish in the market. And it was safe to play off this 21 multiple times until we got this candle right here. This was a huge sell-off, and it was a golden ticket the next day to get rid of whatever you were holding. And that's exactly what we did here. Now, this huge hammer candle, it popped up above this 21-day moving average, but this here was your expectation breaker, meaning just when we thought after 2 days of consolidation that we were above this 21-day moving average, we sold off hard, we used the 21 as a area of resistance, and now we have headed lower faster than we have in the past year, guys. We haven't seen a move down like this since since back here, since when was this? October 2023. Okay, so when you see something down fast like this, now this was 5 days in a row. We haven't seen that in well over a year. Okay, so now when we see something like this, what I'm expecting to see here, guys, is some form of bounce. You don't come down this hard, this fast without seeing a bounce back up. That's just how the market works. We don't go straight down. We don't go straight up unless you have, one of these over here. But even then, we still didn't go straight down. We had these bounce days, right? So you got to understand, guys, we don't go straight down. And if we do, we're talking nuclear winter here, but we're going down fast. I am expecting a bounce, but I'm expecting a bounce into these declining moving averages before we start to head lower. My first guess is going to be this 50-day moving average. So keep in mind, guys, as much bullish or a bearish expectancy that there is in the overall market, there still is going to be a bounce at some time before we start to head lower. Now, if we do bounce and we start to head lower and create a new lower high, this can be considered a correction. As of right now, I'm still considering this a correction just because I have hope and I have dreams that my 401k, my Roth IRA, and everyone else's isn't going to take a complete failure here. So I would like to see this catch and head higher. But as of right now, we are under all of my moving averages, and the 10-day has now crossed over the 21, the 30, and the 50. So there is no hope in sight right now. So we can expect that GDP data to maybe Wednesday that we want, as Carlos was talking about earlier. Now, since we brought up Bitcoin, we'll just look at Bitcoin because Bitcoin has been showing relative strength in the overall market. Why is that? Well, as the market trails down lower for 5 days straight, Bitcoin on its 5th and 6th day are holding above, its 5th, 6th, and 7th day are holding above this 50-day moving average. So it's really nice to see that there is some slowdown. There is some accumulative buying potential going on here. People like you and I aren't stopping this. This is a lot. This is financial ownership stopping this from going any lower, any faster. So you can see right here, guys, big wick up off this bottom, holding a 50-day moving average. If it breaks this 50-day moving average, I will expect it to head on lower, but this is your first low. Now, if it comes back down, we want to see a new higher low, but if it doesn't happen, I can expect this thing to come down even lower, maybe to this 5,200 area. So that is my expectancy for the SPY and Bitcoin. Now, QQQ, I want to bring this up, guys. This is the tech-heavy QQQ. It's what led the bull market in the very beginning. This is what's leading the charge to the downside. So we're seeing relative weakness in technology right now. And I just wanted to point that out before we carried on. So that's all I got for you, Carlos, right now in the overall market.
Yeah, it looks good. And with the S&P 500, I think with the bounce, it just kind of adds more pieces of the puzzle for what's going to happen before it happens this week, adding to the bullish economic reports that we've seen, and needing that bounce is just part of the nature. And so even though it may rise for a week, the next week could be bearish, which could easily continue trending downwards. So but again, we're seeing a lot of crossovers on this graph, so that's meaning that things are the directions is getting ready to change until further notice, until it recrosses over itself again. But for now,
absolutely,
we have an opportunity this week of bearish characteristics. Now, Dave, do you think that the GDP report will provide, even though it's lower, it's a 2.5%, so it's lower than the previous, do you think that's going to provide bullish characteristics or bearish characteristics?
Well, if gross domestic product is coming out lower, I will have to see how the economic report comes out, and I'll have to see how price action handles it. But with gross domestic product, so I'll just read it out loud so everybody's aware of what gross domestic product is.
Yeah, it's very interesting because again, typically the number would need to be higher for it to be more of a positive or a bullish thing. But again, for it being lower, that would normally be a negative thing or a bad thing. But that's where we're kind of wondering: should we expect bad news as good news? And that's kind of what I'm thinking. And usually when we see that, we could see that in multiple days, which we really haven't accounted that for this week, other than that report, because again, the government that was the government's goal, was to try to get it right around that mid 2% range, and before they start lowering interest rates. But then again, if they lower interest rates again, that could also do more harm than good. So then we could start seeing that investors could start seeing that, even though they've been anticipating this the whole time. So.
It's absolutely one thing I want to read out here is that the GDP, or gross domestic product, measures the annual change in inflation adjustment for all goods and services produced by the economy. So you have to understand, if we have a higher reading or a higher rating, that means that the prices for things are continually going up, right? So if we have a lower rating and it's adjusted to that 2.5 rather than the 3.5 that it was, and it's showing that we are having less things cost more, right? That's going to show that that the hike stays that we're having at 5.5% is actually doing its job. It's actually working. Now, Fed Powell, in multiple speeches, he said he does not overreact to any data, right? So 2.5 looks good, but at that same time, that doesn't mean he is going to overreact and say, okay, now that we have this GDP data, right now we're going to cut these rates. He's going to see where that whip, I like to call it a whip, because whatever he does 6 months from now is actually going to take effect in the market. So if we actually see it starting to come down, that might increase the odds of us actually getting a rate hike or a rate cut this year. Now, I've heard anywhere from this year we were supposed to get 6 rate cuts, now 3, now 0. So I think with the fear, the geopolitical tension in the Middle East, with the fact that our last GDP was higher, our PPE, our CPI, all that data was extremely higher than we wanted to. Heck, even the economy was showing its absolute resilience with the job growth numbers. Not a lot of people are even filing for unemployment. So it's showing that we have a resilient economy with higher numbers, because people are still buying, people are still spending, people are still that need, that demand is there, and there's not enough supply. So that being said, this GDP actually coming out lower than expected, or as the forecast expected, might actually be very resilient, and it might show us that bounce. Now, will it will it have that expectation breaker to the downside and give us that push to the north side that we need to sustain? I really doubt it, not with the way that we're moving right now. Now, of course, I don't know, nobody really knows which way the market's going to head, but I think with this GDP data on Wednesday coming out at 8:30, guys, I think it's something we'll really, really pay attention to, because I think it can really show you a bounce where if it does start to pull back, we might find those new higher. It's going to be a really touchy subject, and I'm glad that you asked my opinion, because it got me really thinking there.
Oh yeah, well, and especially if you know, if we know what's going to happen before it happens, there's a lot of these millionaires and billionaires that are going to as well, and that's where we're just going to see a huge, you know, volume, you know, moving in lots of different directions. So we could see both, you know, bearish and bullish characteristics as things are you know, stabilizing. But this week is also kind of a what I call the Super Bowl for earnings. I mean, we got some huge players, companies scheduled to release their financial earnings. So if you guys want to tap onto my screen, let's take a look
I'm so
at
pumped for this.
the top
I'm
10.
so pumped for this. This is the Super Bowl, baby.
Oh, it really is, and there's just some huge, you know, but you know, I have the top 10. You know, earnings listed right down here, listed in our featured and announcements area at the top of our group, and it's always available for you guys for your reference. These are, I usually post these throughout the Saturday and Sunday, so that way it's there for our convenience. But this week, I mean, there's just so many companies, as you guys can see on my screen here. But you know, we'll go over the top 10, which are going to be companies like a Verizon on Monday. Then Tuesday we have General Motors and UPS and Tesla. But also Wednesday we have Boeing and AT&T and Meta and Microsoft's on Thursday. And then Friday we have the ExxonMobil and Chevron for the energy segment, which is no brainer. Those will do pretty well. Now, going with the top 10, we have the, let's see, Tesla, which is the number one. And that is really kind of a no-brainer that they've even mentioned in the beginning of this month that their, you know, sales and delivery reports were significantly a lot less. However, Tesla, which is their ticker is TSLA, is confirmed to release their earnings on Tuesday after the stock market closes, and they are definitely expected to miss their earnings. Now, even investors are bearish going into the company's earnings release with a 22.1% expecting an earnings beat. That's got to be one of the lowest that we've ever seen with Tesla. While option traders are pricing in right around a 9.8% price movement in either direction. Well, the stock normally move, which is normally that volatile, so we should definitely expect almost a 10% swing in either direction. But 22.1% expecting an earnings beat, that's not good for the company. On Wednesday, April 17th, there was an unusual amount of buying activity. 39 contracts of the $276 put, which is very unusual, but you'll notice that these the values of something that is that in the money is going to be very expensive. So that's usually, we're seeing a lot of high rollers. A lot of people with a lot of money are betting against Tesla because the contracts are a lot more expensive. They're more value. So that way, the advantage, if you were a millionaire or billionaire, you can buy less contracts. It's actually an inconvenience for you to buy 100 or 1,000 contracts because they all execute in little spurts. They don't all execute at once because the price of the stock is changing as well as the contract. And so if you're a high roller, you want to spend thousands of dollars per contract rather than, you know, $100 or whatever, because you don't want that many contracts. And so you want to spend more, get less, and have, you know, almost the same kind of volatility. And so that's kind of what we're seeing here. And even though the expiration date is even June 21st, which is got to be significant. But just notice this is unusual activity that's also been spotted here. I just want to point that out. But let's take a look at Tesla's graph. If you guys want to tap into Dave's screen, Dave, what does Tesla look like to you?
Yeah, guys. I'm really happy to be talking about this because if you know anything about the stock market, you've been looking at Tesla, and everybody wants to catch this falling knife here. Now, I've been saying constantly on my channel that if something is looking weak while the overall stock market is heading up, you need to get your hands off of it. It's not a good thing. And I always say, Carlos, as you know, anything below a 200-day moving average is not good. You need to be hands off these stocks. And here's why. First of all, if we look at the overall trend of this, you can clearly see it is to the downside. Second off, it's below a 200-day moving average. Third, the 200-day moving average is curling down. So it's showing me multiple reasons to stay out of the stock. Now, on top of all of this, guys, in January of this year, if you look at the S&P 500 or the QQQs, you will see that the market was on a beautiful bull run above a 21-day moving average and doing the opposite of this trend. It was doing the complete opposite. So while the market is heading to the north side, we watch Tesla continually and gradually, not even gradually, this is just major sell-off, guys. And it just got hit hard. And the harder it got hit, the smaller the bounce, the harder it got hit. New lower highs were constantly being put into this. So I said once we started getting that bearish sentiment in the overall S&P 500, what did I want to do? I wanted to short Tesla. I missed my opportunity. You can still see my alert here. It actually happened in pre-market when it covered this little bit of a gap here. And I wasn't able to get a hold of Tesla at 160, unfortunately, or I would be up thousands and thousands and thousands of dollars with this move. But hey, you can't catch them all, right? You can't catch them all, but that's A-okay. So guys, when it comes to these earnings and everyone's bearish and this thing is looking down and out, there's a few things that Tesla needs to do. One, it needs to beat its earnings expectancy. One. Two, it needs to start creating new higher lows. It needs to start looking more like this. A low, a new higher low, and then a push up above a 200-day moving average. Then lastly, that 200-day moving average I want to see curling to the north side. This has everything going against it and nothing for it. So we need to be really careful with this, but I'm not saying don't put this on your watch list for earnings. Earnings can be a huge expectation breaker. You never know what that old Elon Musk has up his sleeve. He might come out with something, or something may happen where we see a major gap up above these and it continues higher, and it would be considered what I call an episodic pivot. It's something I learned from one of the greatest traders out there, Christian Quilamagi. So that's why I always like talking about these earnings and seeing what is to come. It'll definitely pop up on my gap up scanner and everyone will be alerted if it does. So that's what I have for Tesla. It's unfortunate because it was a leader a few years ago in the market, but now you need to understand, guys, not all of previous leaders continue to lead in the new bull markets, and this one clearly shown that to be true.
Absolutely, and it's like an athlete. You always have a certain athlete where they have their time to shine, and then there's usually another one that comes around the corner, and the stocks are the same way, and that's why we never want to favor or get attached to any particular stock, and that way, if you are, it's harder to want to sell, and that's you don't want that. You never want to use emotions when trading. And Elon Musk has always in the past provided surprises, and I believe he will continue to provide surprises. But there's still things that we know that they plan to do, even though in the past we've talked about how they wanted to produce a $25,000 electric vehicle. That was just announced recently in the last couple of weeks that is being canceled, which is fine, because it would be nice to have something that inexpensive maybe a smaller version of the Model 3, but it's not going to be profitable for the companies. And if it's not going to be profitable for the company, it's not going to be profitable for the shareholders. So they have to focus on what is going to make the company money, but also to always remember, in order to get different results, we have to try something different. Otherwise, if we keep doing the same thing, we're going to keep getting the same results. And so eventually, they're going to introduce something different very, very soon. It could be it could be later this year or next year, but the main thing that they're eventually, inevitably, they're going to take reservations on this robot. It's called the Tesla Optimus, and if you haven't seen it already, this is just a picture of it right here. And so there's a lot of them here that are available, and every once in a while they just show a little bit more and more advancements with this. Now this robot is going to eventually, he's going to go over another demonstration on this, and one of these demonstrations, he's going to say at the end that now you can go to tesla.com and reserve this Optimus robot, and this robot's designed to do basic tasks at home or at work, or whether it's at a factory or whatnot, or at or wherever. I mean, this is going to replace a lot of humans basic and boring tasks. And so, but it's going to provide huge revenue for the Tesla company, and it almost looks like it's almost ready. And so it's going to be weird how we're going to go in this next phase of doing that, as well as this video that Elon Musk produced just a few weeks ago regarding his plans for the space advancement and going to Mars and stuff, and how we'll need more jobs or people to fulfill these jobs, and it just makes sense that they'll also produce a lot of these robots and have them also work in space. And they don't need oxygen tanks and other things, so it's just going to be really interesting to see. But again, they're going to. He even mentioned he wants to mass produce millions of these. Unlike we've seen other video clips and things of like Boston Robotics, which they have phenomenal, almost military like droids or whatever you want, robots. But those just definitely seem to be a lot more expensive. Where this is more economical. Where again, it's just provided to do basic tasks, not military tasks. And so but it's gonna happen. And so as well as maybe other things Tesla could potentially do, and it has been discussed kind of in the past, which kind of gave me some ideas. And so one day I put in the Facebook Messenger AI. I asked it just to kind of produce what it thought a Tesla cell phone would look like, and it provided this beautiful picture of a Tesla cell phone. And so the idea behind this is, once Elon Musk has a pretty nice blanket of the Starlink satellites wrapped around the globe, that this could potentially be a satellite phone that could pretty much have coverage around the planet, whether you're in the ocean or in the mountains or wherever. It communicates with the satellite via like an internet. So it's not your traditional cell phone signal. It's most likely it's going to be a little different, where the signal could extend out, be a little weaker, but it would be a lot more a direct, using a like a voice over IP type of thing, an internet phone, rather than the type of signals that are being used today. So it'd be very, very interesting to kind of see. Again, it's been talked about a little bit in the past, but I just don't want us to forget about what could potentially happen, since it's been mentioned. So this is just a reminder of something that could potentially happen. Now, the next most anticipated financial earnings release, which is going to be Facebook or Meta. Meta is confirmed to release their financial earnings on Wednesday after the stock market closes, and they're expected to beat their estimates, which we've seen a lot of unusual buying activity in the past that we've mentioned in our previous meetings. Investors are also bullish going into the company's earnings release with a 72.6% expecting an earnings beat. Option traders are pricing in right around a 9% price movement in either direction, where in the past it's also been up to 15% with its price movement in recent quarters. Now on Friday, April 12th, there was an unusual amount of buying activity, right around 95,000 contracts of the $1,030 call strike price that expires on Thursday, June 18th of 2026, which is very, very way out there, way out of the money and the expiration. But we've seen a lot of, again, unusual buying activity with a lot of open interest. And so there's definitely something going on with Meta. If you guys want to tune to Dave's screen, let's take a look at his charts and let's take a look at Facebook there.
Yeah, guys, if you click on my big head, you'll see my chart in front of you. And one thing I have to say about Meta is it has been an absolute leader in this market, leading the overall run as well as of your other mega caps. Now, this beautiful, beautiful stock here is still holding up very, very well. Now, I say that, but it has broken down below that 21 and now that 50-day moving average. And if we look back, that 50-day moving average has been its key area of support. Anytime it's broken down back here, when it was trading sideways, anytime it broke down below that 50, it would get bought and right back up. Now, will this happen again? Now, with GDP on Wednesday, like I said about the whole, is this a correction rather than a new bear market starting to form? Well, that might happen with Meta. This could be the best time or the worst time to buy Meta, but earnings is coming out on the 24th. I think this is definitely something that we need to keep an eye on. Heck, I might even actually stream this on my YouTube. We might actually do a live stream of Meta. Let's see, when do they actually come out here? They come out conference call Central Standard Time at 4 p.m. So yeah, we'll see how that lines up with my schedule and stuff. But I think this would be a very good one to hear what they have to say. You know, the whole time that we were down here in the COVID lows and this bear market here actually is what I'm trying to bring up. During this bear market and this huge correction that we had in 2021, old Zuckerberg was buying up companies that had to do with his metaverse. We know that was stuff like that, but he was buying up all this technology. He had so much extra cash on hand. And if you look up some of the best companies out there, they are the ones that during these pullbacks, they have the most cash on hand and they're buying up the companies that are around them. And when that happens, you can see it was just, I mean, this trajectory that he had on this, he's doing an amazing job. Now we're breaking down below that 50-day moving average. So will it get bought right back up like we have seen back here in this same case? That is to be determined. And if it does, that is another very bullish characteristic. Now, there's also undercut and rallies a lot of the big guys like to talk about. This is an undercut. We're undercutting this key area of support here, this 30-day moving average. And undercutting it is getting all your weaker investors out before it heads higher. Now, these are my thoughts. They're not yours. I am going to wait until after earnings. If earnings shows to be true and shows to be that we are still having sustaining buying power below this 50-day moving average and it wants to get bought up, then why not be a part of that trend? So Meta being an absolute leader still in this market because it's holding up a lot better than your other giants in this field, I can see this earnings being just absolutely nuts, whether it's to the north side or the downside. I don't know. I'm not a fortune teller, and if I was, I would be a lot richer. I'd buy you all a coffee, I promise. That's all I got for you on that one, though, Carlos. Meta's beautiful.
Oh yeah, looks good. But as we've talked about in the past, where about a little over a year ago, Facebook Meta had let go about 7,000 of their staff members. And again, a company's staff is always their biggest expense. And so if they can, if once they release that, they can then focus on a profitability with what revenue that they're generating. And so that's why we've also been kind of seeing the Facebook slowly kind of going up, but also we don't want to forget that they also have a competitor, because when TikTok came out, it was a huge, cool little thing where you can have these short videos and flip through them. Well, then Facebook came out with a feature called Reels, and so obviously when one thing happens, somebody wants to duplicate it, and so TikTok has had a lot of pressure because it's primarily owned by China, and the government as their reasons for disputing the fact that China wants to spy on Americans and their activity and what they're. Plus, they also mentioned that a lot of the Chinese citizens, TikTok provides more educational influence, unlike how our side is more uneducational material, and so. It's really, completely different in when it comes to those types of algorithms. But also, the United States has provided a lot of warnings and threats, that they want to buy it. That way, the United States can have a little more or a lot more control over that. Now, some other people will say that the reason why a lot of pressure is on TikTok is because TikTok may also focus on the freedom of speech. So that may result that the United States government doesn't want people to see or hear certain things that are on TikTok. They want control over it. And so recently, basically yesterday during the House thing, from what I'm seeing, that part of the money in the bill of all this stuff that they're wanting to do is to they basically they want to buy TikTok, and so and if they don't, then it will be completely banned in the United States in 6 months. So we have 6 months, so we need to make sure that this is on our calendar. 6 months from now would be October, and so this is going to be huge news. We're going to hear about it probably a little bit every month, but just know October is the deadline that the government has provided TikTok. It's either now or never. And so, but let's say they do ban TikTok, so that means they have millions, if not billions of members will have to go somewhere else. They're going to go to Facebook, they're going to go to Snapchat and wherever else, or there could also be a new company that'll want a little opportunity. But these people are going to go somewhere, and when they do, it's going to increase the more views, the more users for the rest of these platforms. And when that happens, their stock value goes up because the revenue went up. So this bad news can be good news. It just depends on how we look at this. But this is going to be, like I said, huge news. And so it's just important that we are aware of what's going to happen before it happens. And so the next most anticipated financial earnings, which is Intel. Intel, like I said in the past, that I believe Intel is going to be the next AMD. Intel is a very underappreciated stock, which is valued, I think, right around $30. Intel ticker is INTC, and they're confirmed to release their earnings on Thursday, April 25th. After the stock market opens, and they're expected to beat their estimates. Investors are also bullish going into the company's earning release with a 63.6% expecting the earnings beat. All this information looks really good, very healthy, very bullish. Option traders are also pricing in right around a 7.8% price movement in either direction, where normally in the past, recently, it's moved right around 8%. So that looks good. Now on Wednesday, April 3rd, there was an unusual amount of buying activity of right around 22,000 contracts of a $35 put, expiring on Friday, May 10th. 2024 of this year. So that's the only really kind of a hiccup that we're seeing on this that we can see. But let's take a look at Dave's charts. What are your thoughts on Intel?
Yeah, sure, guys. Just coming on over here, the first thing I see is that we broke this beautiful uptrend, just like you're going to see on a lot of your stocks out there, because I think it's only 25% of stocks right now are above their 50-day moving average, and Intel is one of those that took a huge hit with tech. So we had this beautiful move up with the semiconductors, with the AI stocks, with technology, and then it came down here with the rest of the market, and it broke down hard. This looks like an SMCI kind of sell-off that we can see right here. Just got hit extremely hard and never recovered after breaking that beautiful trend line that we've seen sustaining buying power from for a long time. Now, we also have the 10-day moving average even cutting down below that 200-day moving average, and that 200-day moving average is starting to flatten out. Now, I think that if the earnings comes out and it's a beat, a huge beat, I think that's the only thing that's going to save this stock from continuing lower. Of course, this big of a pullback, we're expected to see some kind of bounce, but for it to recover as much as it's fell down, that's going to be very hard. I'm going to need to see new higher lows. I'm going to need to see something like this, Carlos, down here. Here's a new higher low, or actually a double bottom, then a new higher low, then a break of a 200-day moving average where the curling 200-day moving average starts to head up to the north side, and then you see new higher lows after that before it pushes higher. So this thing has a lot of proving to do, and I think it can start with earnings. But right now, it's just, I'm hands off this stock. This thing's hot. This thing is hot right now.
Definitely downtrending, and definitely gives us the reason why people have been doing puts right before earnings, because with all the news that's kind of going on, but even though we're expected that the earnings beat, we're just waiting to see, I guess, its bottom. And but we do see that like we've mentioned in the past, when we see something like that, we should expect a bounce. And so that could be something that we'll see right before or right after earnings, but we'll all to be determined. We'll definitely have to take a look at and follow any kind of unusual buying activity this week. And so we'll always definitely keep you up to date within our chat rooms in our group. Just make sure that you're around, and but if any questions, always don't hesitate to let us know. Now, Microsoft, which is the next most anticipated financial earnings this week, Microsoft's ticker is MSFT, and they're confirmed the release of their earnings on Thursday after the stock market closes. And they're also expected to beat their estimates. Investors are also bullish going into the company's earning release, with a 73.8% expecting earnings beat. That is very, very high, and higher than average. Normally, average is right around 65%. Any higher than that would be considered above average. Any lower should be considered below average. And so that is a really good one. Plus, it's a very favorable stock with a variety of different traders and investors. And so they always like to ensure that they beat their earnings. And if you see Microsoft's track history with their earnings, usually they beat their earnings like 4 out of 5 times. And so they are very a good stock, and have also lately been focusing a lot of artificial intelligence as well. Option traders are pricing in right around almost a 5% price movement in either direction, where it averages right around 4%. So option traders are expecting a little more volatility with this one than before. Now on Friday, April 19th, there was an unusual amount of buying activity, right around 14,000 contracts of a $350 put. and a 14,000 contracts of a $350 call strike price that both expire right around Friday, May 10th. So could be potentially seeing some straddling activity with a very large amount of contracts with these two. But if you guys want to take a look at Dave's screen, let's take a look at the graph. What are your thoughts on Microsoft?
Yeah, so Microsoft was holding up there for quite some time, and even when the start of the pullback started to happen, Microsoft was looking pretty exceptional. But this here, right here on this day at 4:15, this is what we call the pile driver. The pile driver candle came out, and it did not bounce back very well, did not get above that 21-day moving average. And it's really sad to see Microsoft just get cut down hard here, guys. So I'd like to see, and you're going to hear me say the same things over and over again because I do have a very specific strategy for these. Now, if it's pulling back, I need to see something proving itself to me, right? It's still above a rising 200-day moving average, but it's undercut that 10, 21, and 30, not to even mention the 50-day moving average. And this 10-day moving average is starting to cut through these here too. So that's a scary sign when you're talking technical analysis for Microsoft. Now, when you get a big pullback like this, yes, I am expecting a bounce at some point in time, but I'm also not trying to catch a falling knife here, right? We're going to get hurt if we are trying to catch a falling knife. So let's let this thing prove itself to me. And with the earnings coming out on the 25th, I think that gives us enough time to see if we want to see a curl, maybe a little slow, gradual way here. And like Carlos said, they have a big earnings expectance beat. If that happens, we might get that bounce, but then will we make a new higher low? What do I mean by that? Well, this would be a new higher low. This is a low. This is a new higher low. It's still a low, but it's higher than this one. So a new higher low. So we need to see a bottom, and we want to see a new higher low, maybe somewhere up here in the 405s. But right now we're at a psychological area of that 400. It's sitting at 399.12 right now, which is just below that psychological area. So if it cannot hold this area, we might just continue to go down. And I think Monday is going to be very interesting to see what happens in the overall market because we haven't seen pullbacks like this in a long time. So fear is starting to grip. The VIX volatility index is high. So we want to see what's going to happen on the 25th for Microsoft. I think it's going to be a very key point, not just for Microsoft, but it being the leader for so long, I think it's going to show what is to happen for big tech stocks like this, what's going to come into fruition for a lot of these other tech stocks as well, Carlos.
As we get more and more of these pieces of the puzzle together, we can see that the picture becomes more and more clear that this week is expecting to be kind of like a bounce week where we could see a lot of stocks recover based off of the graphs, the economic reports, the financial earnings and everything. So I mean, this is all just great data, and is why we always want to have these stock market meetings. It's just really no different than really any other industry that's important to talk about that industry. What's new? What just happened? What's going to happen? That way, it just makes everyone a much better trader and investor. And so,
yes, sir.
Let's go to the next one, which is Google.
Oh yeah, Google. This is going to be a good one. I'm excited about this one, Carlos.
Oh yeah. Now Google, which is the GOOGL, is the ticker, is confirmed to release their earnings this Thursday, April 25th, after the stock market closes, and they're expected to beat their estimates. Investors are bearish, however, going into the company's earnings release with a 64.3% expecting earnings beats. Option traders are pricing in right around a 6% price movement in either direction. On Friday, April 19th, just the other day, there was just a unusual amount of buying activity, almost 7,000 contracts of a $165 call strike price that expires this Friday, April 26th. So it's very interesting. Now we're seeing some bearish and bullish clues with Google. But what are your thoughts, Dave? If you guys want to tap into his screen, let's take a look.
You guys, first thing I want to say is Google is an absolute monster here. You guys, not only did the market have a scary 5-day pullback, 6-day pullback, Google just before just hit new all-time highs at 160.22. And then what happened during the pullback? Well, Google gave a little bit back, but it's still trading above a 21-day moving average. That's an absolute monstrous thing to say. And if you would have, Google has multiple realms, right? And it is considered technology, right? Now, especially because, AI, right? I mean, it's got its hands in a little bit of everything, but it's considered a technology stock. So when you see all of technology starting to take a hit and Google still holding above its 21-day moving average, that gives me two things to say. Both of them aren't great. One, this either A, has a lot of room to come down, or B, it's telling us a little something here. It's telling us that the investors that have Google will not sell for very good reason. Smarter people than you and I with a lot more money are out there holding on to shares of Google for a good stinking reason, guys. A good stinking reason. And there's reason behind it, and I don't think I need to just explain it clear as day to you. It's black and white. There's a reason why they're holding on to these stocks. Now, if they start to sell, if Google's the last thing to hold up, Google could come down very hard and very fast. That's why I always will preach risk management. Know where your stop out is. Now, mine on Google will be that 21-day moving average. If it closes below a 21-day moving average, then I don't want to have anything to do with Google until it can show me that it can make those new lower highs and we're still on a bull market. But I will say this. If we're going to get a bounce in the market, if that's what's expected by Wednesday, and we're going to see a bounce, we don't know if it's going to be a recovery bounce or just a bounce before we head lower. If the market decides to bounce here, I can almost guarantee you, mark my words, we'll see you next week, that Google is going to go make new highs. Okay? So these aren't buy or sell recommendations, guys, but what I'm saying is if you see strength in a stock, when the overall market is heading lower, when the market starts to head back to the north side, you can expect that same stock to head even higher. Okay, so go ahead and keep this on your watch list, because with the earnings coming out on this stock and people being, a lot of activity on this stock on the 25th, it's going to be one beautiful day in the market, whether it's to the north side or to the south side. We will see. Carlos?
Oh, definitely. No, that looks great. Let's tune back to my screen. If you want to click on the Robinhood screen, let's take a look at the next financial earnings for this week. And it looks like it is Verizon. The ticker is VZ. Is confirmed to release their earnings Monday morning. So tomorrow morning before the stock market opens. They are also expected to beat their estimates. Investors are bearish going into the company's earnings release with a 71.1% expecting an earnings beat. So they're bearish but expecting to beat. So very again, those are just always very unusual clues, and that's why we always want to make sure that we're looking at the graphs. Now, option traders are pricing in right around a 4% price movement, 4.3 to be exact. Normally averages right around 3.9, so we're expecting maybe a little bit more volatility with this one. On Monday, April 8th, there was an unusual amount of buying activity, 58,000 contracts of a $35 call that expires Friday, June 21st, so later on this year, 2024. So for Verizon, 58,000 contracts, that is a lot and very unusual for that stock. Let's take a look at Dave's screen. Let's check out the graph on Verizon. What are your thoughts, Dave?
Well, first, I want to say thank you, Carlos, for throwing all this together, because a lot of times you'll bring up stocks that I've long forgot about, or stocks that I don't usually look at, in sectors I don't usually look at. And the thing that I've been finding is that sectional rotation means everything, guys. And if you find out that in the communication sector, there's new higher lows being built over a 21 curling up to the north side, moving averages, these are stocks that you might want to create a sector watch list. And this is one of them. So he just brought up Verizon. I haven't seen Verizon for 3 years. I honestly don't think I've even looked at Verizon communications in over 3 years. Let's take a look here. It's been 2 years. 2 years since the last time I looked at the stock. I'm actually marked out this area here because I had an investor tell me, that this is the low. There's big things happening for this, but you guys know I don't believe in anything until it's above a 200 curling day moving average. So I marked this out so next time I came to my chart, I could actually see what the hell he was talking about. And sure enough, we never broke above that 200-day moving average. And whoever he got money into this, they actually lost money. Now, if they're still holding money, they've had to hold on to this thing for 2 years to actually make money on it. But now is the time that we want to take a look at this. And why do I say that? Well, first of all, it's building those new higher lows, first and foremost. Second of all, it's above a 200-day moving average, and that's curling to the north side. Now, another thing is you have a beautiful area to risk from. What do I mean by that? Well, when I get into something, and I'm a swing trader primarily, swing trader and a day trader, I am not a long-term investor. I think long-term investing is silly because you're tying up a big portion of your capital for a longer period of time. To me, a long-term investor is kind of lazy because they don't want to look at the market. They don't want to just pick stocks. They want to get something that they like. They want to hold it forever and hope and dream that that's going to do well. If you're going to do that, find yourself a financial advisor so they can articulate what is good and what is not for a portfolio. Don't just take your money and throw it away willy-nilly. This is a stock that holds an area of support. Meaning if this area of support gets broken at 39.50, or I would even take this low of 39, even psychological and an area of support, if it breaks this area, then I want out of it. It's probably going to head lower below the 200-day moving average. But if it wants to continue higher and push up, that would be a beautiful sign that Verizon Communications wants to head even higher. Now, of course, I won't play or do anything until after earnings unless I already have a nice pad on the account, meaning I already have some money in this and it is already many dollars in the trade up, where I have a profitable a portion on there. So if there is a pullback, I'm not going to lose money on it. But with the earnings, they're actually coming out on the 22nd, so that's going to be tomorrow. That's going to be Monday, and it's going to be, it looks like Standard Central Time. Let's see, earnings conference call before market. So that's going to be before the market opens. So we're going to know tomorrow morning, guys, what happens with Verizon. And I think if it stays within this channel, meaning this top here of 43.21 and this low here of 39.45, we will get a better idea of its direction. So this looks really good where it's at. Now, do keep in mind it is a slower mover at 1.4%. So this isn't something that is just going to make you rich overnight. But if you are looking to invest in something for a longer term swing trade, then this might be the stock that you can take a look at while holding a beautiful area of risk here at $39. Carlos, I think you might be muted, brother.
Oh, okay. Thank you.
Yeah, you're
That
welcome.
looks good. Very good graph. And, Verizon and AT&T, basically one of the number one, wireless cell phone providers when it comes to communication. But what if, Tesla ever did come out with that satellite phone? What that could potentially do to Verizon and AT&T could be catastrophic. That would be devastating because
Absolutely.
they don't have
Yes.
that ability. Over years, Elon Musk has slowly, accumulated more and more satellites up in space, and it belongs to his company, and he can do whatever that he wants to do with it. And if he wants to bring out a satellite phone for the world to use, he will. And again, that has been mentioned, and a thing, cause and effect is always something to think about, and Verizon and AT&T would definitely be one of them. And so the next financial earnings for this week is, let's go with Exxon. ExxonMobil for energy, their ticker is XOM. They're confirmed to release their earnings on Friday morning before the stock market opens, and they're definitely expected to beat their estimates. Option traders are pricing in right around a 3% price movement, where normally they move right around 1.5%. So with this analysis that we usually get from Earnings Whisperer, there isn't a percentage expecting an earnings beat, because most likely it's going to be 100%, because this has been a very, with everything that's going on with the high gas prices and everything, the United States primarily, we get most of our oil from Canada. That doesn't change, and so when they manipulate the oil, inventory levels, that way they're always hovering right around zero. It just makes oil look like it's more in demand. We have a low supply, high demand, and so all that is intentional for financial gains. And so this is definitely a no-brainer that we are expecting them to beat their estimates. Now on Wednesday, April 17th, just the other day, there was also an unusual amount of buying contracts, over 8,000 contracts of the $113 put strike price that expires Friday, May 3rd. And so, which is several weeks from now, but when we look at these energy prices, that they're up there, because they've all kind of gone up there, 20% or 25% in the last several weeks or several months, because of a lot of the issues going on in the Middle East. But it'll be very interesting to take a look at the graphs and charts on ExxonMobil. If you guys want to tune to Dave's screen, let's take a look at the graphs. Dave, what's your thoughts on ExxonMobil?
Well, I actually have been watching ExxonMobil for a while now, because if you guys don't realize, ExxonMobil moves the whole energy market, okay? So energy is going to be utilized, and a lot of people have been watching this XLE, which is the actual sector, is XLE. Well, if XOM moves, XLE moves, and it moves all the rest of the energy stocks. So if you're looking at XOM here, one thing I noticed is it looks exactly like gold did just a couple of months ago. What do I mean by that? Well, this is a weekly chart, and you can see 1, 2, 3 tops here, right? And now what happens? It breaks out of this top, and it pulls back, and it retests. Now let me move into the hourly. I want you guys to remember this area right here. This red line right here at the top, okay, and then this yellow line right here. We're going to zoom into the hourly, and there's a reason why I'm going to do this. I don't usually do this for you guys, but I want you to see this area right here. So we break out above, we head higher, then we have a nice trend pullback here. We undercut, and we start to rally. Now we're doing that on higher volume as well. So mark my words here, guys. And I think Carlos is backing me up on this, but with the geopolitical tensions happening and everything happening, I think they manufactured this pullback and this undercut to scare investors out, so that way when they came back up here, people didn't want to get in here. People wanted to get in here, and I was the same person. I wanted to get in on this breakout because this thing is not coming back, especially if you look at gold, okay? And now it created this undercut and rally, which is only showing more bullish signs, especially if you look right here. It's on higher volume too, guys. Okay, so keep an eye on energy. This is a slower mover at 1.6%, but I truly think that if you can find your way into this energy, it's going to be a great area for a buy. So I like to play these trend breakouts. This here looks like it would be a beautiful trend breakout. It's already breaking out in pre-market. Now, with the earnings coming up, I do have to wait until the 26th, which I think you said that was Friday, Carlos.
Yeah.
And if that is to happen Friday morning, this is something I'm definitely going to be looking at for an episodic pivot. If they come out with an earnings beat, or let's just say good news is bad news, and they try to undercut this, I'm going to be buying this up down here at 118, or if this wants to gap up, I'll be playing a 5-minute opening range break, and I won't get into those details. If you want to learn how I play those, you can just check out my YouTube. I got them plastered all over there. I take a lot of those types of trades. Just check out David Worrell on YouTube and hit that subscribe button, guys. Yeah, that's a shameless plug right there. But I will say this, guys. I like the look of XOM, and I'll give you a better example why. So if we zoom in on here, this is the weekly. Let me show you gold. I've been talking about gold constantly. Guys, look at this. Let me zoom in here, and you'll see exactly what I'm talking about. 1, 2, 3. This even had 4 tops right here. And when it broke out, it tried to pull back, but nobody was having that. Everybody bought that sucker up, and now look at it. This is the same look on gas, on energy, okay? That is going to be the breakout area is right here. It never pulled back. It never looked back. Now, XOM, we'll go back here. Look, it looks quite the same, only you have a bigger, faster push here. Okay, I don't know what that tells you, but that tells me there's a lot of demand here. Now, is it going to tucker out? Is it going to tucker out? Maybe we sign some kind of treaty or bill or something. Who knows? And this thing tuckers right back out. Well, that's fine. This is a beautiful area for a short. We're within a range here. That's going to look nice. But like I said, we zoom in on the hourly. You can see there is an undercut and a rally on higher volume. That tells me we are still flashing those bullish signals there, guys. So pay attention to XOM because Friday is going to be lit.
Oh yeah, definitely. That's going to look very, very interesting. And then news that could affect energy, like ExxonMobil. If you guys want to tap back into my screen really quick, is so. I guess with the rumors we're seeing on Twitter, Twitter is a great, definitely, source of free speech, but, it's almost too much freedom of speech, but you really have to, dissect, certain things. But, the rumors on there, it's kind of like word on the street, is, Iran says they're not going to retaliate after Israel had done their thing, and so it almost seems like we're not expecting any more confrontation between those countries. However, with this huge $60 billion spending bill that just passed yesterday to primarily give to Ukraine and Israel, that Putin's response, he was furious, and he says this is just going to cost more Ukrainian lives. And so, even though Zelensky extended their guidelines for their drafts to, I think, 14-year-olds to up to 60-year-old men, and so it's very interesting, and but also I have on our screen what I call the battle map, and so this is Ukraine right here. We can see where Russia is on the east side of Ukraine, and ultimately, in a military standpoint, this is a stalling position, because Ukraine really hasn't been able to really penetrate through this. Russia has basically been manufacturing things like crazy and building up more and more stuff on here. And this, I'm sure we're not going to hear about this because this is, I'm sure, all classified information. But it's a no-brainer. What would you do if you were the leaders on each side? And as a leader on this side, we want to fortify. We want to build up, more heavy armor and firepower and everything here, because we know that that there's, this side here is weak now, but also they need to, before this money gets there, it's almost like they need to start moving forward now. Otherwise, it's going to be too late. So something easily could happen at any point unexpectedly, and that could easily provide more bearish characteristics. But again, it's not quite ready yet. But again, it could happen at any time. But like I said, a lot of this money and equipment that we're giving you to Ukraine could be weeks from now or months from now. And so, but like I said, Russia has been building up. While this position has been stalling, in the background, I'm sure that they're building up more and more supplies, getting ready to move forward before Ukraine gets more of these supplies. So, but to be determined. Ultimately, what we could easily see is an agreement of Ukraine just giving Russia this territory and then calling it truce. And so, but again, that's why it's really important that we focus on a lot of this stuff, because once that happens, then the market will begin to recover, and people's economy, especially around the European area and stuff. So it's just important to know kind of where we're at with things. But then going back to our financial earnings, Visa is the next financial earnings for this week, and Visa isn't normally talked about for financial earnings, because it's usually just kind of it's just kind of there, and it's a slow mover. But again, as we're, like I said in the past, with our economic and stock market cycle, that we are approaching the top of our economy, and usually when that happens, that means an early recession is right around the corner, and that affects financial stocks and that industry. And so Visa, which a lot of the financial stocks, which will be more watched as we approach these points. Visa is confirmed to release their financial earnings this Tuesday, April 23rd, after the stock market closes, and they're expected to beat their estimates. Especially with all these high interest rates, it'd be a no-brainer, as investors are bearish going into the company's earning release with a 64.2% expecting an earnings beat. So this could easily be a good news is bad news type of effect. Option traders are pricing in almost a 4% price movement in either direction, where normally Visa moves maybe up to 2%. So we're expecting twice the amount of volatility with Visa, and that's why it's on our watch list. Now on Wednesday, April 3rd, there was an unusual amount of buying activity of right around 4,000 contracts of a $270 put, and over 3,000 contracts of a $290 call strike price that both expire on May 17th this year, 2024. So this is a very, very interesting amount of information. Dave, if you guys want to, let's tap into Dave's screen and take a look at the graphs, and what are your thoughts on Visa?
Well, I tell you what, I haven't looked at Visa in a while. You can see I got lines all over this stinking chart. But I will say this. Visa is on its pullback above a 200-day moving average. And I think this earnings, just like we have seen for multiple other earnings, could be the stopping point on this pullback. Now, it is below its 10, 21, 30, and 50-day moving average, with the 10-day crossing over that 50 moving average. So we'll need to see a little something from Visa in order, in order for me to be bullish again on it. But as of right now, it's headed on a spiral towards that 200-day moving average. But I do think we have seen multiple times this 200-day moving average has acted as support. So we'll see when it comes back down to this area if it wants to hold it again there, Carlos.
Yeah, and I wonder, there's a lot of rumors and news regarding BRICS. BRICS is is kind of like a United Nations that China, Brazil, India, and Russia and South Africa kind of put together, and they're trying to get other countries to become part of this club. And so part of their goal is also to get away from the U.S. dollar and forming their own digital currency. And,
Jest fazla como?
and so
Yeah, I think it is.
I'm going to
Actually,
mute this one there. So again, the that could easily affect the financial segment. And one of the other rumors and news regarding gold is that a lot of these countries that have gone away from the U.S. dollar and gone with the gold standard now is causing gold value to rise. So it's not just with the animosity that's going on in the Middle East, but it's other things that are happening that the news doesn't want to talk about. And as they're going away from the U.S. dollar, and trying to do their own thing, and so that's just one of the interesting things that we're seeing happening right in front of us, and especially if they're going digital with certain cryptocurrencies, that's just going to keep the bullish characteristics with the with crypto. And so the next financial earnings, which is General Motors or GM for the ticker, is confirmed to release their earnings this Tuesday, April 23rd, before the stock market opens. And they are expected to beat their estimates. Investors are bearish, however, going to the company's earnings release with a 53.8% expecting an earnings beat. So almost a 50-50. Expecting an earnings beat on that one. Option traders are pricing in right almost a 6% price movement in either direction, where normally it moves right around 5% for General Motors. So this will be a very interesting one because, again, these are the first quarter financial earnings, and the first quarter was was a very interesting quarter because we also have a lot of manufacturers that produced a lot of electric vehicles, and that sat around because gas prices were very low, and so that was not good for a lot of fuel efficient vehicle sales, whether it be new or pre-owned. But now it's the opposite. So definitely do not let that get by you. That gas prices and energy is up there. They're very, very high, and so EV sales are very intense right now. Hybrid sales, electric vehicles are doing very, very well right now for the second quarter, and that's why, as we talked about, Tesla, how we're expecting a lot of bearish characteristics. But once that's done and over with, investors are always going to want to look towards the future. And so after we see the bad news, we may see it result in a good news effect, because now again, investors are going to be prepared for the next quarter, and now it's time to recover the Tesla stock. But let's take a look at General Motors charts and graphs on Dave's screen. If you guys want to tap onto his screen, let's take a look.
All right, guys. One thing I want to show you here, though, man, I couldn't help but noticing the resemblance, and I don't know if it has anything to do with it, obviously, because but when I seen this, I thought, man, this looks a lot like the Russell 2000. So I just hopped over to IWM, and doesn't it? It looks, there's a lot of resemblance with this stock ticker and GM, and they just look very, very similar. I don't know. Sometimes I make odd correlations like that. But GM, this is the area it needs to hold. It's above a rising 200-day moving average. We're seeing higher, interestingly enough, higher areas of volume coming in down here. One down here at this bottom, one at the new higher low, and then another one at a new higher low. So I really, truly think that this $40 area is the price area to hold. Now, it is still above a rising 50-day moving average, so that can show you that it is holding up stronger than a lot of the other stocks that are in this market. So that being said, I think GM is going to be very interesting on earnings to see if it wants to choose a direction. Now, if we still continue to have a very heavy overall market, it's going to continue to want to drag down any stock that's out there. I don't care, even Google, it'll help drag it down. But if the market starts to turn around, it looks like this thing has already got a beautiful head start against its competitors, holding that 50-day moving average, and it looks like it's trying to slow down right here in its tracks. Carlos?
Yeah, that looks pretty good, but yeah, very interesting similarities between those two, as you mentioned, but a lot of similar, characteristics. But General Motors, yeah, is a very, well-known old, company, and we can see that, a picture can say 1,000 words, and this image kind of shows a lot of the brands that General Motors owns, whether it be here in the United States or in other countries, and so it all affects, the company. Now, last but not least, we have UPS, which is in our top 10 financial earnings for this week. Now, UPS is the ticker. They're scheduled to release their earnings this Tuesday, April 23rd, before the stock market opens, and they're expected to miss their estimates. Investors are also bearish going to the company's earnings release with a little over a 40% expecting an earnings beat. So that is definitely not good for UPS. Option traders are pricing in right around a 5.5% price movement in either direction. Normally it moves right around that, so that's about right. Now on Thursday, April 4th, there was an unusual amount of buying activity of right around 4,000 contracts of a $155 call strike price that expires this Friday, April 26th. So this will be very interesting. If you guys, let's take a look at Dave's graphs. You want to tap onto his screen. Let's take a look.
Yeah, guys, so I'm just looking at UPS here, and I haven't looked at it in a while. But UPS, you can clearly see, I'll just draw out a real simple marking here. You can see we're on a downtrend here. We're also below a lower, a 200-day moving average that's heading lower as well. And the most recent sells here on higher volume are in the red. You can see down here, guys, if I blow it up, these big, nasty red volume candles, as to where you can see this big, awesome green candle pushing this thing to the north side. You can see all these big, nasty red candles pulling this ticker down. And I think a lot of it has to do with Amazon has just got the takeover, man. I see Amazon coming by my house at least once a day. I know, maybe I shouldn't indulge in that. But yeah, I mean, we're always ordering everything off of Amazon, and I'm sure UPS is going to take a big hit from that. Now, there's enough business to go around, but when you have somebody that you can buy from their store and they're going to deliver it to you, as to where UPS is just a delivery service, you can see how the Amazon of the worlds are going to start taking over. And Amazon, not to mention, has been an absolute beast holding up in this overall market as well. And now we're supposed to talk about UPS, and I feel like I've been talking about Amazon a little too long. But let's just put it this way, guys. We do have new higher lows being built up under a 200-day moving average. So that is at least a good sign. Now, is it going to have a nice beat and break up above the 200-day moving average and try to continue rather than just getting pushed right back down? Because we have this trend line up here at 170 that even if it gets past that 200-day moving average, it still has a lot of that overhead resistance that it needs to get through too. So that's about all I got for that one, Carlos.
No, looks good, thank you. And but over time, a business always has to try to figure out its best and most economic methods to function. And Amazon in the past has always worked with UPS or companies like UPS and FedEx, as well as the United States Postal Service, as well as other little contractor, delivery guys, as well as creating its own delivery system, using their own trucks, whether it be all electric or hybrid or whatever, just to try to maintain profitability with what revenue that they're generating. And if they can be more self-sufficient and try to weed off these other companies that would be more expensive, that way it would be more profitable for Amazon, but we'll see less revenue for these other shipping carriers. And so it just makes sense, just putting more of these pieces of the puzzle together. Now, the investing.com's top 5 things to watch for this market is always a very important thing to make sure that we don't forget anything. And one was the United States inflation figures that we went over using the scheduled economic reports. And then number 2 was the big tech earnings. And so we just went over that, as well as the number 3, the oil prices, and the a lot of the news going on in the Middle East. But with what's happening with one kind of starting to work itself out on one side, the other side could increase. And so but then number 4 is the PMI data, which is over in the Eurozone. And the United Kingdom. So we're going to see some economic reports over there, as well as the
If I may.
yes.
Carlos, if I may, it's getting really late over here, guys, since we started doing these a little later. So I'm going to hop off here. But before I left, Carlos, I just wanted to thank you. I do appreciate you having me on here as a guest and letting me share my knowledge about technical analysis. Again, I want to thank you, too, for bringing up a lot of these awesome earnings. If it wasn't for you, there would be a lot of this that I wasn't able to piece together myself. So it's great kind of sitting at this round table, kind of piecing everything together. It helps me get ready and motivated for the week ahead. And one last thing, guys, I appreciate you guys letting me be here and doing this for you. I absolutely have a passion for the stock market, for stock analysis, and bringing you that bite-sized data that I do, not just for you, but for Robinhood Stock Market Watchlist in general. It helps keep me on track. So if you guys haven't already, my name is David Worrell. You can check me out on YouTube. We constantly are working hard to bring you the news as soon as it come out. We have it within 30 minutes. We have your bite-sized news. So instead of trying to figure out everything that you need to, it comes out in a short clip, so that way you can indulge in that and you can make your decisions based on that bite-sized data. So again, Carlos, thank you so much for having me. I'm going to go to take a nap, or at least hit some sleep before a beautiful market Monday. So thank you so much again, and I hope you have an awesome night.
Absolutely. Thanks, Dave, and we'll see you in the morning here.
Yes, sir, we will. Take care.
All right, guys, you want to tap back onto my screen here. We'll just finish the top 5 here. We'll take a look at some options activity. Now, number 5, which is the Bank of Japan, looks like they're going to be releasing some quarterly growth and inflation data on Friday. So that's also good to know, with some miscellaneous international activity that's scheduled to happen. And so let's look at the stock options activity that we've seen. This information is basically Friday at close, and so it's always good to know kind of like kind of what happened. We're basically to always follow the money, and that way we know where the money is going, or where it's headed. And so looking at the options activity can always provide us a very valuable bit of information, because we have a volume which is always today's or the current day's buying and selling activity, and then we have calls and puts. And if you're not familiar with stock options, a call is betting the stock goes up. A put is betting against the stock, betting it goes down. And if you bet against the stock and it goes down, your account goes up and significantly. So stock options just gives you more options and abilities to do certain things that you're not able to do with shares. Now, NVIDIA, which hold the #1 place place for the most stock option volume. It closed on Friday with about 54% call ratio with a 46% put ratio. Now the volume was right around 3.3 million, which is a lot, and a lot more than average, only because that the stock was down 10%. And so that is huge, and one of the reasons why I always recommend to straddle, because straddling is when you're holding both calls and puts on the same stock option. I know it may sound confusing. Why would anyone bet a stock goes up and down at the same time? Well, it's because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. And so look at the my screen, my graph here. Now on the bottom, now on the left side is the calls, and the right side is the puts. And just kind of looking at some of these strike prices, we can see if we were to hold a call and a put, that we would have lost about 75% on the calls, but on the puts we would have gained 1,000%, because again, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So, but it's important to implement certain rules and guidelines to maintain consistency, but also to manage your risk by making sure you're doing this with volatile stocks and stocks with a lot of volume. And so, but you can see, hopefully now you can see the potential that this can do, because it doesn't matter if the stock goes up or down. As long as it picks a direction, this strategy can be extremely profitable, especially going into recessions, whether it be bear markets or bull markets. Again, as long as it picks a direction, this strategy can be very, very profitable, because it doesn't matter which direction that it goes. And so and that's why we're seeing a lot of activity with NVIDIA with almost a 50-50 call and put ratio, because right now with that kind of volatility, this is a perfect one to straddle. It doesn't matter which direction that it goes, as long as it picks one, this will be game on, bring it on. This is perfect, and that's why we see a 3.3 million in options volume. Now Tesla, which is usually the number one most option volume, is second place for Friday. I mean, it was down only 2%, which is still a decent amount. It was down, I think, less than that earlier on Friday, but it finished at right around 2.2 million in options volume, with almost a 50-50 call and put ratio, but a little more on the put side. Now, Apple was third place. It finished down to $165. It was down about 1.25%. But it has right around almost a 60% call ratio and a 40% put ratio. So it looks like the option investors are a little more bullish with Apple going into Monday morning, as well as AMD. AMD was down about 5.5%, but we almost have a 60% call ratio for AMD. Amazon, 64% call ratio for Amazon. Meta, about 57. So those are just a little more bullish than they are bearish. But Netflix is about 50-50. The super microcomputer, that was down 23%. Definitely people are straddling that one with a 50-50 call and put ratio. That is a lot of volatility and great opportunity, because bad news can be great news. It just depends on how you utilize it. And then we have ARM, or ARM Holdings. They're down quite a bit, and they have a 70% put ratio. So investors are betting that this stock is going to keep going down, with a 30% call ratio, just in case. And you can always blend your straddling. It doesn't always have to be a 50-50. It can be 60-40. I just don't recommend a 70-30 ratio, because if you're wrong, having a 30% on one side will be more difficult to recover if things don't work out, versus a 60-40. That 40% is a lot easier to still make gains with that one if you're wrong. And so, but straddling, you'll know that, I mean, that strategy will save you in a lot of different occasions. Now, Microsoft, which we talked a lot about today with its earnings coming up, looks like they finished right around $399. It was down 1.25% on Friday, but it closed with right around 54% call ratio and about just under 46% put. So almost 50-50 there. Micron Technology, same thing. Going into the Saturday, we didn't know exactly what was going to happen throughout the weekend. But even though the House meeting was pretty predictable, we knew that they were going to pass the money, the bill for the sending to Israel and all that other stuff there, Ukraine. But then we have Palantir Technologies, about 50-50 there. But Marathon Digital Holdings, which is kind of affiliated with the cryptocurrency, has a 71% call ratio, 29% put ratio. It was up where most of the market was down, up almost 10%. And so while investors are still betting that this stock is going to keep going up, because cryptocurrency is, again, very active. We are in a bull market for cryptocurrency. And so a lot of the platforms and other services are going to do very, very well. And so then we have Bank of America. They were up, over 3%. And with a 60% call ratio. AMC was also up 8% with over a 66% call ratio. Then we have the Trump Media and Technology Group, or DJT, which I look at this as one of those manipulated stocks, very similar to like GameStop. It's a stock that that wouldn't normally be here. If it wasn't for certain reasons, but it's a name that may also have a lot of fans, but also a lot of enemies, and so it's a stock that is going to kind of get chosen and picked like GameStop did back in the day, where people just liked the stock and bought and held on to it. When that happens, we see a higher market capital. We see a higher share value, though we'll see volatility, just like we did with GameStop and those other meme stocks, where we see very high percentages and then low percentages, but we'll see just new higher lows is what we're seeing. But when you see of when this stock was released, when it was an IPO just recently, it was like $10. I mean, or $15 or whatever. I mean, it's doubled compared to what it was, and it was up 9%. Though this is not I looked into this as a stock option. It's got a lot of time depreciation, so I don't recommend holding onto this one for a very long period of time. Very short period of time would be recommended if you're going to do it at all. But it's one of those manipulated stocks that I just kind of zone out. I don't want anything to do with it because of the volatility and the very high time depreciation. I'm out. But it's just a very interesting stock to kind of watch and to kind of see where it's headed. And then we have Coinbase, which is another cryptocurrency platform, is down to $211, down 3%. But it has a 59% call ratio. So investors are bullish going into Monday with that one. And so then we have Alphabet or Google. We have Snapchat. Now Snapchat, which has almost an 86% call ratio. So this holds the highest call ratio than any other stock option. And we've talked, even though it's down 4%, the stock has gotten a lot of activity. I've gave you guys alerts on Wednesday, Thursday, and Friday. This stock has provided a lot of unusual activity. It went up a lot on Wednesday, Thursday, but it went down on Friday. But people are buying the dip on this one. And then all of a sudden we see throughout the weekend, we have the news with the TikTok, how now the United States government has provided China 6 weeks to comply with either selling it to us or that we'll have to ban it. And so if they ban it, because I just don't think that they're going to sell it to us, but if they ban it, then that means that those users will now venture off into Facebook, Snapchat, and other platforms that will be able to provide short video clips. And so so Snapchat's very low. We could easily see this gain more momentum as it's trending upwards. And then we have Intel, which Intel again also has their financial earnings coming up this week. We have almost a 61% call ratio. So investors are buying and getting ready for this week, which ultimately looks like it's going to be more bullish than it will be bearish. And so, but let's take a look at the option volume leaders. These are the most active individual calls and puts for Friday. Now, a lot of these are going to be expired, and so we want to make sure that we're not paying attention to those. But out of everything that is current that hasn't expired, we see Snapchat is leading the list, number one. So again, Snapchat, which is $11.16 a share, we have a $15 call strike price that expires this May 17th, or approximately right around 27 days from now. We have a lot of open interest on this one, 134,000, and a lot of volume, which could potentially be selling activity, could be buying activity. So we'll have to look at this as we approach after opening on Monday morning to see if this added to the open interest. Because if you're not familiar with stock option, open interest is the total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trades. This means that this was like purchase, let's say Thursday, Wednesday, Tuesday, Friday, or Monday, or whatever, previously from Friday. And so this is basically showing how many people are currently holding, but volume is the current day's buying and selling activity. So it could add towards the open interest on Monday, or it could subtract if it's selling activity on Monday morning. So we'll have to see. My guess with what we've been really seeing a lot through the stock market meeting is, my guess is probably going to add to it. So we can easily see this be 200,000 or 180,000 or whatever. So, but I just think people are very bullish with Snapchat, because there's also another one down here, a $13 call strike price with the same expiration date, about 64,000 open interest and almost 40,000 in fresh volume. And so this is more unusual activity that we do not want to let this fly under the radar. And so the next one is LVS. I'm not familiar with what LVS is. Let's click on it, take a look. Las Vegas Sands. So that's very interesting. It's definitely not one that's on this list, but for some reason it is. So we want to make sure it's on our watch list. So it is currently at $45.46 a share, but we have a $45 call strike price that is basically in the money. But it has an expiration date of June 21st, or approximately 62 days from now. It has an open interest of right around 53,000, but it had the volume of 52,000. So we'll have to make sure if this is buying activity or selling activity to see if it adds or subtracts from the open interest going into Monday. Now we have Lyft. We have two call strike prices for Lyft. Very, very bullish. Where Lyft right now is at $16.15 a share, but we have a $20 and a $25 call strike price. Both expire in May 17th, or approximately right around 27 days from now. Now this one has a 60,000 in open interest with a volume of about 51,000. So, and then the $20 one has an open interest of right around 4,500 and a volume of right around 50,000 as well. And so we'll have to kind of take a look to see what Lyft does, but we want to make sure this is on our watch list, because there's a reason why it's on here. And so we need to do a little more due diligence to find out what's going to happen before it happens. So another trick to this is by then sorting this out by open interest instead of volume. So that way we're seeing what are people holding on to. Again, as we always follow the money, we need to know where the money's going. And so in this case, we have a SoFi, which it holds the highest open interest out of every stock option in the stock option system. And so SoFi, which is currently at $7.11, we have a $15 call strike price that is set to expire next January. And so this has about 174,000 in open interest. So that is a lot. And then Lucid, which is currently at $2.45, we have a $3 put. So people are bearish with Lucid, but again, EV sales were down significantly last quarter because gas prices were down, and anytime that happens, people don't really focus on hybrids and electric vehicles until gas prices are high now. And so it's just a way to know, and to predict, again, what's going to happen before it happens. And so this could be investors being prepared for Lucid's financial earnings that are set to happen soon. And so as that's accumulating, we definitely want to put that on our watch list and make sure we're aware of what's happening there. And then we have the Snapchat that we talked about, the $15 call strike price. There's the other SoFi, $10 call strike price, same expiration date. Then we have X, which is I think steel. This is not normally on this list, so there's a reason why the United States Steel Corporation is on this list, because maybe they got earnings coming up soon, or maybe there's just something going on with the the precious metals segment, as well as gold. We talked a lot about gold. Gold just keeps going up. It's currently at $17 a share there. And we have a $20 call strike price that expires next January as well. Pfizer, which is on the list, but investors are betting against Pfizer. Pfizer, which is currently at $26 a share, we have a $25 put that expires mid-May on the 17th. Now, here's Intel. We talked a lot about Intel, especially with its earnings coming up, as well as being undervalued or underappreciated. It's currently at $34.20 a share, but we have a $40 call strike price. And even if you're not into stock options, this information is still very, very valuable, even if you're interested in buying shares, because again, you can see where people are betting stocks are going to go up, and within a very short period of time, and a very a good amount of gains, even as a share. If it goes from $34 a share to 40, that's like almost a 20% gain. So that's within a very short period of time, under 27 days. That's really, really good for a lot of short-term investors. So this data is very, very, very valuable to all different types of traders and investors. Now, Ford Motor Company, which is currently at $12 a share, we have a couple different puts. One right under $10 a share, and then one just over $9 a share. And so, but this strike price is set to expire next January, so we're still almost a year away. And so, but investors are very bearish with Ford. Though, keep in mind, though, even maybe a lot of sales may be down here in the United States, but they are up substantially in many other countries, particularly in places like South America, Europe, Australia. Sales are up 20%, 30% for Ford Motor Company in other countries. So we definitely don't want to make sure that we're not aware of those, because Ford is that their sales are internationally. They're not just here in the country, and they're building several other mega factories here in the United States to help with the production of electric vehicles, but also electric vehicle manufacturing of the batteries. And so that's going to be huge. Once those are built, they'll be able to increase their production with more higher range electric vehicles, especially with pickup trucks. Now, PayPal, we've talked a lot about PayPal in other past meetings, especially when it was right around $50 not too long ago, like a month ago or so. Now it's at $62.31 a share. That same call strike price is still there in the top highest open interest list with $145 call strike price that's set to expire this January. And even if you're holding shares on PayPal, from it to get to there to here, you're doubling your investment. And so in a very short period of time, just depends on your perception. But PayPal, which is basically pretty much the first online credit card processing company that came out in the 90s, was hugely innovated then, but have been really outdated in the last decade or so. And so, but they have a new CEO, and he's came out and said that they're going to focus on innovation, and so that's very, very bullish. And so they're really going to set to compete with companies like Square and many other credit card processing companies. Now, Neo, which have been greatly undervalued. Only because when our President Biden became president, he immediately cut China off with the United States microchips. And Neo needs the United States microchips. They need chips from NVIDIA to help process their LiDAR technology for their autonomous features. And so, but when Donald Trump was president, as long as it was like, if you scratch my back, I'll scratch your back. It was always kind of a business deal kind of thing, and if China didn't wasn't being fair, then all of a sudden Trump would implement tariffs. But we never cut China off with microchips, and that's when we saw Neo was right around $40 a share, $50 a share, $60 a share. And so, but once they were cut off, I mean, that it just really, hurt the company. But this could easily change after the next election, because as I mentioned before, different presidents will focus on different parts of the industry, and sometimes we kind of get their feedback. Before that, they'll say, if you vote for me, this is what I'll do for the economy. And so, but we're seeing that, because Neo is not normally on this list with the highest open interest, but we're starting to see it. It's right in the middle of the list now, with a $10 call strike price that's set to expire after the election of January 17th of 2025, or approximately 272 days from now, has 98,000 in open interest, and it's accumulating because it wasn't on this list, and it's slowly accumulating. So we'll definitely need to put this on our watch list, and just to see what happens as we approach the election. And so, but if Biden is somehow reelected, then Neo isn't going anywhere. It's going to continue to stay where it's at. So again, it just depends, to be determined. And then we have American Airlines, which is currently at $14 a share, but we have a $13 put. So we have investors that are betting against American Airlines. Then we have a FCX. I can't remember what FCX is. Let me see. Fremont. And so they're on the list, not normally on the list. Their share price is just under $50, but we have a $55 call strike price that is set to expire in June 21st. We've talked about the SoFi, which we've seen that one already, as well as there's another steel company, X, but we have a $55 call strike price, but the put, which holds a much higher open interest. So it looks like they're kind of like more 60% more bearish on the X than they are bullish. There's another Lucid. We have a $3 put. That one's definitely in the money. Then we have an Amazon $215 call strike price that is set to expire next month. We have a Tesla call. Look at this, you guys. A Tesla call, $610. What makes us think that investors are that bullish? because again, as we've talked about Tesla throughout the stock market meeting, how we know that they're going to miss their earnings. It's almost a no-brainer. But typically when that happens, again, then investors want to focus on the future after what's going to happen, and they're going to be bullish because the second quarter is going to have much better sales and deliveries for Tesla EV vehicles. Plus, Elon Musk could announce a date for something that he could release, and that could provide more bullish characteristics. But $610, this is 4 times the amount of where it is now at $147. But again, as we follow the money, there's a reason why people are betting that Tesla is going to reach this much for some reason. And so we need to make sure that this is also on our watch list, as well as Apple, which is currently at $165 a share. We have a $220 call strike price that's also set to expire in June 21st, which is approximately 62 days from now. Has a very good amount of an accumulating open interest. So very, very interesting activity that we see here, and make sure that these are on our watch list. Does anybody have any questions about anything that we went over? Anything anybody want to add to the meeting? Are you guys pretty good, ready to rock and roll? All right, guys. Thank you very much for showing up. This has been awesome, very informative. But last but not least, just want to show you one last thing with investing.com. It's important to also utilize this for a lot of different reasons, but also we can monitor the U.S. futures live. And as we talked a lot about let me see here. Maybe it's that one there, real time. How most likely that this week is going to provide more bullish characteristics than bearish characteristics. And we see that the U.S. futures, now that we're looking on the live page, we see that the top 3 indexes here, the U.S. futures are bullish right now. And so even though it's still pretty early, it's not pre-market yet. We're still in Sunday evening, and so but even though this could still be affected by other world markets, in Asia and then Europe. But right now, I mean, these are doing really good. The S&P 500 is up 0.25%. The Dow Jones, as well as the Nasdaq, which is up almost 0.4%, almost 0.5% already, and it's not even pre-market. But sometimes we see we're going in the next morning, all of a sudden it flip-flops. But like I said, we heard from Iran saying that they don't intend to retaliate, so we're not anticipating that there's going to be any more animosity over there, at least nothing major. And then the only thing that Russia said with with this big bill was that even though he was kind of furious and upset about it, but it seemed like his main comment was that all this is going to do is just cost more Ukrainian lives. And so, but he didn't say or mention anything about retaliating on anyone. But again, to be determined. We'll have to kind of focus on the news as well as Twitter X. That way, we're ensuring that we're getting information that's not being filtered. So anyways, you guys, thank you very much. Any questions, please don't hesitate to let us know. You guys have a great Sunday night. We'll see you guys in the morning.